Okay, welcome back. So we had a short, a bit too long of a 2-day break. It was a holiday here in Singapore. So took a bit of a break with the currency call, with the live sessions last night as well. Back in the frame of things, back in the currency call routine. Today being Wednesday, the 4th of May, Star Wars Day, we are looking at the pound dollar, but because we've missed out on a couple of analysis, what I'll do for today as well is look at the Aussie dollar, the Kiwi dollar, the Euro dollar, and the pound dollar. So I'll just do a quick analysis of all the couple of pairs that we've missed out on over the last couple of days, and also for today, and also looking at the dollar index. With that, welcome again, Traders Club members, to the currency call. If you are watching us on YouTube, then you are watching this a bit later. If you haven't already, make sure you check out the links, jump onto the Traders Club so that you can not only jump onto this call live, but you can also get the trade signals, the discussions with trades, the news analysis, anything that pops up as it happens will feed back to you and get you ready for your trades and to support you through your trading journey. With that said, quick disclaimer again, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself. So please remember to do your own analysis prior to entering any trades. Right. So looking at the news, just doing a quick recap. On Monday, not a lot of things happened, right? So we're just having that discussion on the chat here on Zoom. Markets have been very quiet, sitting in that consolidation. It's been a bit funny that as we took a break, the markets also seem to have taken a break. On Monday, we had the Chinese on holiday, we had the UK on a bank holiday as well, and not a lot, well, a lot of news, but not a lot of big, hard, big price moving news since Monday at that point. Let me just move this around. Okay. So the only thing to pay attention to was the ISM manufacturing PMI number here, which dropped for the US dollar from a 57.1, expected to actually rise slightly to a 57.5, but it actually dropped to a 55.4. This drop anticipated is because of the prices, the upscaling of prices, the inflation climbing in the US, affecting manufacturing, not just now, but into the future, because the US inflation is at an all-time high. So we saw this drop in PMI, still in the expansionary phase in that 55.4, above 50 is still in the expansionary phase. That's why we didn't see a big drop in the dollar index, but we saw the dollar index sitting in that consolidation. Following on from this, yesterday we did see the RBA increase rates, right? Cash rates, the interest rates for Australia. The RBA did increase rates from a 0.1% to expected was a 0.25. It increased to a 0.35. So a 25 basis point increase there, which we saw a brief strengthening in the Aussie dollar, but then it retraced back down again. I'll tell you why that retraced. But before that, let's look at the rate statement here. So if you look into that, you can read the rate statement clicking on latest released. The rate statement here, main thing is that they increased cash rate by 25 basis points. They have also begun withdrawing some of the extraordinary monetary support that was in place during the pandemic. So they've taken some of the support out, some of the stimulus out of the market. So we're looking at two things that are trying to strengthen the Aussie dollar a little bit by increasing cash rates and also removing the monetary support. What the Reserve Bank of Australia has also indicated is that they are seeing the lowest rate of unemployment in almost 50 years, right? So very good employment numbers now. Time to increase rates with inflation right now at that 5.1%, right? So 5.1% is high, but not as high as every other country out there. So they seem to have the lowest of a high inflation, right, at 5.1%. But the expectation for coming from the RBA is that forecast for 2022 is for inflation to get to about 6%. So further increase to 6% from 5.1 to 6, but coming back down again to about a 3%, to have moderated to about 3%. Main thing to focus on here is these forecasts are based on assumption of further increases in interest rates. So that's the first hint coming from the statement that the RBA is looking at further rate increases. This increase of 25 basis point, first one done, they're looking at further rate increases. And also finally at the bottom, reiterated that point, the board is committed to doing what is necessary to ensure inflation in Australia returns to target over time. This will require a further lift in interest rates over the period ahead. So main thing what you can gather here is that we're going to see the RBA increase rates into, might not be the next session, might not be the next interest rates decision session, but might be into the next or the one after that, right? So usually what the RBA does is that they do a rate increase, they wait, they will see, they will wait for an impact before increasing rates again. So we might see further rate or we're likely to see further rate increases in the periods ahead. Whether it's going to be the next one or not, let's see what happens with inflation. Let's see what happens with the Aussie dollar. But we know for sure we're going to see further rate increases because of that, right? Because of that news, what we actually saw on the Aussie dollar, jump into the Aussie straight away. What we actually saw on the Aussie dollar with that news there, this was yesterday during the news, we saw it shoot up towards that 7149, almost 7150 level before retracing and sitting right across, now at 7113, right? So it seems like, if I zoom out, it seems like that big downward move in the Aussie dollar seems to have halted, found a base at about 7039 or 7040, now looking at possibly moving towards the upside. What I think is likely to happen for the Aussie dollar in the super short term, that means from now till the FOMC meeting or release at 2 a.m. tomorrow morning, we're likely to see the Aussie dollar move up, right? We're likely to see it. I would like to see it come up towards that 7160, but I don't think it's going to break above. I think that what we'll see is that move now towards that point. And then with the FOMC rates decision tonight, we might see it come back down again from that point, reacting off that 7160 level back down towards that 0.7 or 7 flat, 0.7 flat, right? So I'm looking for that move on the Aussie dollar for now, tracking upwards towards that 7160 level before the rates decision coming from the FOMC to track lower towards that 0.7 level. All right. So that's the Aussie dollar on the H4 time frame, the super short term and the medium term analysis. With that, on Tuesday, we had that news, and then we had a bunch of other news which didn't seem to move prices too much across the board. We saw markets sit pretty much in that horizontal fashion for the rest of the day. In the night, we did see some movements, but it all retraced back down. The JOLTS jobs opening for the US actually came out at, was 11.34 mil, expected 11.19, slight increase to 11.55 mil. But with that, we did not see a big increase in the US dollar, pretty much set across, because the focus is not on these news. The focus is on what's likely to happen on Thursday morning, right? For today, Wednesday, we did see the New Zealand employment numbers, no change, found some stability there. 3.2 expected for 3.2 previous for unemployment rate, expected to stay, came out at 3.2. Employment change number quarter on quarter was, right, it was a 0.1, it got revised down to a 0, and then it stayed at a 0.1 for employment change. So no change there on the New Zealand dollar for employment data, which actually resulted in not much happening for the Kiwi dollar. I will show you the Kiwi dollar here. Not much happening there. It's sitting right across, sitting just above this 0.64 level, right? So sitting right above this 0.64 level. What I anticipate here is that for the New Zealand dollar H4 time frame, similar to the Aussie dollar, could move higher, but I don't think it will move that much towards the 6540. I think it could move higher, but same thing with the FOMC to be happening later tonight or early tomorrow morning. We're likely to see it track up, hit that resistance or come very close to the resistance before turning back down again. So that's the New Zealand dollar employment or the New Zealand employment number. No change, finding some support level, finding some base on the New Zealand dollar, but the main focus is the FOMC at 2 a.m. on Thursday morning. Before that, we usually talk about the euro dollar on Tuesday. So we do have a bunch of euro news, PMI numbers to be released for the Eurozone. You can see the German PM or the Spanish PMI, Italian, French, and German PMI numbers to be released. Not a big move expected. These PMI numbers for individual countries generally do not move the euro dollar too much, but the main thing you're going to focus on is possibly some of the retail sales number here, Eurozone retail sales number month on month, looking to drop from a 0.3 to a minus 0.3. So if we do see that drop on the retail sales number, and it's quite likely because the Eurozone is in a lot of uncertainty at this point, if we do see a retail sales number drop, signaling lack of confidence in the consumers, what we could see on the euro dollar is, so euro dollar here, I'm looking for further downside. Euro dollar has found that base, right? Again, it seems like everything has found a base. It's sitting in consolidation now, right now at this 1.05 level. If we do see a weaker than expected or weaker as expected retail sales number coming from the Eurozone, I'm looking for that downside, further downside on the euro dollar. I would not do anything yet. I will wait for it to break below 1.05. Wait for it to break below 1.05, then you could see further downside. What you could be looking for here is selling opportunities below 1.05. Let's say a repeat of what happened there. So at about 1.0485, a very tight, about 30 pips stop loss towards the 1.04 level, about there, about 60 to 70 pips. So you're looking at a 1:2 risk reward ratio towards the downside for the euro dollar. But at this point, do nothing on the euro, just wait it out. I do note that I have not given you any trigger levels on the Aussie and the Kiwi dollar. I wouldn't give you a trigger level right now, but Traders Club members, as we move towards the FOMC meeting later, I will give you an update on possible trigger levels across the board, across the currency pairs that I analyze, to give you some trigger levels on what to do if we see good news from the FOMC or if we see bad news from the FOMC, right? So with that, I would ignore tonight's ADP non-farm number because we do have the FOMC rates to be released at 2 a.m. on Thursday morning. This is a big news event This is a big news event. If you're not used to trading at 2 a.m., I would say don't trade it because we're going to see a lot of volatility. But that also could mean that if you're not used to trading a news event, you could get spiked out of a trade. What's anticipated here on Thursday morning coming from the US is Fed funds rate looking to increase from a 0.5 to a 1%, a 50 basis point increase expected to come from the FOMC. But it's not so straightforward because the FOMC has been signaling this 50 basis point increase. Even since the last meeting, they've been talking about that 50 basis point increase. They're expecting that, didn't happen, came out at 25 basis point at this level again, now expecting that 50 basis point. What could happen is that we might be in a priced in scenario. A priced in scenario means that the market expects this 50 basis points increase. When it happens, it's no surprise. We're not likely to see a consistent move in the dollar towards the upside. We might see a brief move up and then a retrace back down. The main thing is not so much about the 50 basis point increase in terms of the Fed funds rates. Pay attention to the statement that's going to be released at 2 a.m. and also the press conference, or what comes out from the press conference. Main things to focus on is whether the FOMC is signaling further 50 basis points increase, a continual 50 basis points increase, or whether they're going to say that this once is that's it and they're not going to do anything more, or whether they're going to say that, hey, we've done 50 basis points now. In the subsequent ones, we're going to continue with 50 basis points again. It's not so much, again, just to remind you again, it's not so much about the news release, the number released at 2 a.m. It's more about the statement, the signal for further increases, and also the press conference about whether they think that with this 50 basis point increase, with the reduction in balance sheet coming from the FOMC, what's their plan? Are they going to be looking to be more aggressive, or are they going to sit out and wait to see what happens with this rate increase? So not so straightforward in terms of just looking at the 50 basis points and buying the dollar towards the upside. We are looking at the statement and the press conference. Why I'm paying so much focus to that is because if you look at the dollar index, the last time we spoke about it, I said I was going to come down towards this 103 level before bouncing back up again. It did that. It came down almost towards 103. It came down towards 102.88 before bouncing back up again, but it got halted at about 103.60, right? At this point right now, the dollar index is still sitting above 103, but it is at a very high point, right? If I zoomed out, even if I went to the weekly time frame there, you can see that this 103 level, you can see further upside, but it doesn't stay at 104 for a very long time. Same thing again in December 2016, and we've only seen it hit that one, come close to that 104 in December and January 2016, January 2017, and again in March where it hit and retraced back down. So what to look out for here is not to rush into a trade on the dollar index or with that dollar strength, or anticipate a big dollar strength. What I think could happen with the rates decision from the FOMC, the rate statement and the press conference, is that we might see this continue up, right? So I'll move this across. We might see it come up towards this 104 level, but if it fails to break 104, we're likely to see the news release. So I'll do it a bit more specifically, right? Put it at that 2 a.m. level on the 5th, about that point there. We're likely to sit across, move up, maybe slightly, move up slightly. But I think that with the news release, we're going to see it push towards the 104 level, because in general, what we're going to see is most of the markets are going to react to that 50 basis point increase, pushing the dollar up. But what happens at this 104 level is going to depend on the statement and the press conference. I think that if you see the dollar push up towards this point, then wait it out. A lot of trades to be made at this level, both towards further upside or for the dollar to track lower. You know, if the dollar does track lower, then you could be looking at some of the yen pairs, some of the reserve currencies for it to track back down. So a lot of trade ideas, a lot of trade opportunities to be had with the dollar pushing towards the 104. If it breaks above 104, we could see 105, right? But it does need some big change or some big moves coming from the FOMC to push the dollar above that 104 level. At this point, I'm still a bit uncertain. I think that there needs to be very hawkish talk and comments coming from the FOMC before we see it push that significantly towards the upside. But the main focus for today is that pound dollar. Following the FOMC rates decision at 2 a.m. tomorrow at 7 p.m., we do have the Bank of England with their rates decision as well. So central bankers are coming up with all the rates decision for this week. At this point, official bank rate for the Bank of England expected to climb from a 0.75 to a 1%, a 25 basis point move towards 25 basis point increase from the Bank of England. Are they looking at 25%? Could we see a 50 basis point increase as well from the Bank of England? I think that that might be on the cards. It might be quite likely. We know that for sure we're going to see a 25 basis point. We know that members are likely to vote quite strongly for that increase, but I'm thinking whether we're going to see a 50 basis point increase as well coming from the Bank of England. With that, if we do see a 50 basis point increase, then with the pound dollar, it's going to get quite interesting. Why I say that's going to get quite interesting is because pound dollar right now sitting at this 1.2487 level. You can see that late last week it tested lower but it rebounded quite strongly back. So this might be a scenario that we can see FOMC rates increase. We're going to see downside on the pound dollar, but we could see a quick reverse back up on the pound with following the Bank of England's rate increase as well. So two trade ideas here, or possible two trade ideas here, is with the FOMC rates decision at about 2 a.m. there, we're likely to see that track lower. I don't think we're going to see much movements for today all the way to the news release. We could see that move lower. So below 1.2460, you could be looking at a 50 pip stop loss, about 150 pip take profit level, a 1:3 risk reward ratio towards the downside, given that we see that strength in the dollar pushing the pound dollar towards the downside. But also with that, if we do see the pound dollar track towards the 1.2, almost 1.23 level, we could see a rebound following the Bank of England's rates decision. So I'll move this across. So following the Bank of England's rates decision to increase rates by 25 or maybe even a 50 basis point, what we could see is a rebound from this 1.23 level, opportunity to keep quite a tight stop loss. So you're looking at about 1.2322 level, about a 60 pip stop loss, and again 150 pip take profit level a 1:2 risk reward ratio towards the upside on the pound dollar. So pound dollar, looking at it to sit across at this point before the news, Thursday morning news, drop it, and then after that the Bank of England in the evening to push the pound back up again. So a lot of volatility expected here for the leading up to the FOMC news release. And then after that, we do have the pound dollar, the Bank of England with the news release as well. A lot of trades to be happening. At this point, not a lot of trades now. Wait for the news to be released. What you could see is that we are sitting at a very low level. So a lot of chance for it to break lower before bouncing back up again. With that said, Traders Club members, I will update you on some trade ideas leading up to the FOMC meeting release. And also for the short and longer term news, or for short and longer term trades. With that said, trade well, trade safe, and I'll see you tomorrow for a recap of what happened with the FOMC meeting and also the yen and gold analysis. Trade well, trade safe, and I'll see you tomorrow. Bye-bye.